Hello, everyone. It's 8:01 a.m. Chicago time on Tuesday, the 23rd of January, 2018. Thanks for joining us. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're seeing most indices slightly lower. We have a mixed market. The DAX is the leader this morning. German zoo survey came in very strong, or relatively strong this morning at 5 a.m. Eastern. The DAX is trading up 104, up 0.8%. Crude oil is also showing some strength this morning. Crude oil had a strong pop up and a drop yesterday. Tough read, I thought. Crude's trading at 64.14. And the laggard today is the Russell, down 3.8 points or 0.24%. The safety assets are hovering around unchanged mostly. Gold is up $3.90, up 0.3%. So that's how things are shaping up. As far as what we're looking for yesterday, actually, this morning, the key release that we have left is also from the Eurozone. It's consumer confidence advance for January, looking for 0.6. Comes out at 10 a.m., 0.6 for consumer confidence for the Eurozone. At the same time, we got a low importance number, the Richmond Fed for January, expecting 19. And then this evening we get Fed Speaker Evans, but that's outside of trading hours. So let's see what we expected from yesterday. Let's go to our review screen. Interesting enough, my political comments yesterday caused, I guess, agitated a lot of people. It's a sign of how on edge we are about our politics in our country here, actually across the planet. But anyway, didn't intend to offend anyone. These are my opinion and my opinion alone. So the primary expectation for yesterday, given that the market was not able, the government was not able to figure out the shutdown over the weekend, the expectation was, as I said yesterday, barring any news of an agreement, we are likely to trade from the outside in. The expectation was a push to 28.12 or so, and then back to the point of control at 28.04 for an outside in market that's trading in about a 10-point range or so. That was the expectation. Of course, I did announce it on Twitter when it came out. The news, the government shutdown issue was resolved. And so we got a quick pop. We got an initial pop on rumors. And then we ended up pushing through once it was confirmed. So it's the expected response. As I said yesterday, the expectation for the government shutdown was a gap down of about 10 points. I think we got 8 or 7. And sorry, my throat's very scratchy this morning. We got 8 or 7, and then the expectation was for it to pop straight up. And if we did get the agreement, we would see it at new all-time highs. That's what we talked about yesterday. And that's basically what we got, I believe. The scenario 2 was a pullback down to 28.04 again, the prior day's point of control, and then a push through all-time highs. Expected it to push through by a couple points again under its own force, not under the force of newsfeed. By the way, I keep getting comments that the microphone is very poppy, the sound is very spitty. Would you let me know? I made some adjustments. Just let me know with a thumbs up or something if it's nice and clear. It helps me out. I can't hear it from your side. Anyway, so the secondary scenario was a pullback to the point of control, new all-time highs by a couple points, and then fall back in by the end of the day. Again, neither one of those played out. Neither one of those played out because, again, government. Here's what we got yesterday. I don't know about you, but I found this very difficult to trade. I could find scalps in there, but really the ES, I'm not looking for scalps in the ES unless I'm trading from the outside in on very tight range. It just didn't pull back. I didn't see the pullbacks as clearly as I needed to get into positions. Yesterday's profile is very, very interesting. It just multiple distributions. If you look at this, just a trend day profile. Okay, multiple distributions, and what happens here? And what happens here is participants get to a price that's too far, then they check. So the late buyers start selling, the short-term traders start selling, and it starts getting into a pattern, a balance pattern. And then that balance pattern, the balance pattern eventually gets very, very wide. And for every buyer, there's a seller. And so on the next push, you have an impulse pattern and then a balance pattern. So balance, imbalance, balance, imbalance in one direction, with the point of control moving. Usually we have the point of control traversing these high volume nodes. It didn't yesterday. It spent quite a bit of time here balancing out in the 22 to about 17 range, and then finally we moved to the next balance area, which ended up being 27, and then we held there for a while until near the close, the last hour, when we exploded upwards. We finished near highs yesterday with a decent point of control, with a decent high volume node. The point of control did not move out of the initial balance. The initial balance was expected to break. Running stats yesterday, the initial balance held over the last 1,000 days. The initial balance held, I believe, 2.3% of the time. So that gives us a 97.7% probability of a break. And so we got that quite feverishly. Yesterday, the range 2809 to 2836.50, almost 30 points. Very, very wide range. We also had pretty good volume in yesterday's trading. Oops. Pretty good volume in yesterday's trading. Oh, I can't see it. It's pretty much in line, 900,000 or a million or so. And so overall, this is a pretty convincing push-up is what I'm getting at. Now, where does that leave us? When we look at the weekly, it leaves us with the same sort of setup that we had on the first day of the year, right back here. Okay. First trading day of the year. And we continue to ramrod through and push. And what you're seeing here on the weekly is evidence that the market is not able to find sellers. Okay. Really, I'd like to see a paradigm shift in your thinking if you don't think this way already. I'd like you to understand that the market does what it did yesterday because it's seeking sellers, okay? It's seeking sellers. And so unless it finds sellers, it has to keep going higher. And what it's not finding are these sellers, which have just gone the way of the dinosaur. There's just no reason I guess, for the OTF to sell at this point. Buy and hold is in full effect and has been for quite some time. And so we don't see any opportunity here for sellers to come in and get paid. And so we continue to seek higher prices. The market's function is to find balance. That is the whole point. This is why we go to eBay. This is why we go to the supermarket. We don't want to buy our vegetables or fruit or whatever from a cart on the side of the road without some sort of a frame of reference. And having one vendor selling pineapples or whatever you like, avocados, if you're in California, without having a price reference does not give us a comfort factor, right? We would have to be pretty desperate for those avocados to pay whatever price they want. So we come to a bigger market, which is what a supermarket is. We come to a bigger market because this is where we find some balance. Now, in that example, the supermarket is it's a one-way auction. You can only buy, you can't turn around, you can't buy the avocados, go to the register, pay, turn around and set up your own stand within the store to sell back at a better price. It's a one-way auction. But the goal of any market, be it eBay or whatever, the Facebook market feature, it's to bring buyers and sellers together to find the most acceptable price. This is what this product is doing. This is what futures and stocks are doing. They're constantly looking and seeking a balanced price. Don't forget that as you get caught up in your MACDs and your moving averages and whatever else you use. Don't forget that the purpose of the market is to find balance. It's seeking balance all the time. And what we have yesterday is a market that just cannot find balance. It just cannot. It is auctioning higher, looking for sellers to step in. Sellers step in minimally here, and then we end up with this these high volume nodes, as you see here. And then it continues to push through because there isn't enough interest on the sell side to find balance. So what we have is a market that's called one time framing. It's a single time frame market. It's pushing in one direction, and until that stops, our view is going to be the same. Our view is going to be pull back on the open, consolidate, push higher, consolidate, extend the all-time high, seek more sellers, and then balance out at the end of the day with a high volume node where the margin traders step in and become sellers against higher time frame traders, which carry the positions longer, buying from them. And so that's why you end up with these lumps at the top of the profile, right? So here, these lumps right here. See these lumps? These are called high volume nodes, okay, HVNs. At the end of the day, you have traders like you and me trading on margin, sometimes $500 per contract, which is pretty freaking crazy. And they're stepping out, and the longer time frame, the bigger money continues to step in. They're the ones buying from you. And so this is why we end up where we are. That's why I commented yesterday that even though the push-up was contested, let me try to pull that up on my book map. I'll show you. I posted an image of it. I had to restart my book map, so it might be missing the information. I'm not sure. No, it's not. Okay, good. Good. I like this new book map. It backfills the data. So look at this. As the market is pushing higher yesterday, so here's the open right there. There's the open. I'll try to be quick with this. But these are really important things to see. These are very unique market behaviors. We don't see this very often. As the market pushes higher, here it is pushing higher, you have these offers coming in and getting filled in pieces. There's a lot of activity going on here. See that? The activity that occurred right there. And then as it pushes even higher, so it pulls back to that to that collision zone, pulls back, continues to the next collision zone. You have quite a bit of dark yellow or dark or orange coming in, and that's what I was talking about yesterday. Is it's moving up. There are liquidations happening, long liquidations happening as we're moving up, which gives us the context is for a rally like we saw, like we talked about, but there are some serious liquidations going on the way up. You see, look down here. There's very little orange down here on the bid side. Most of the offers, remember, the market has three participants. The ones buying or selling, actually printing. Those are the trades that we see. Those are what makes up our charts, the ticks in our charts. Then you have the participants who are passive, who are bidding and offering. Those are the people that show up on our heat map here. The bigger the offer or bid, the more yellow to orange it becomes. And then there's the third force. These are people who are interested in buying or selling, but they're not showing their hand. They're hanging on for better prices, and they enter at the market. And so you have buyers entering at the market. There's no expectation of the market turning over. That's why you don't have big bids down below. Why would you work an order down below as a big participant if you're not expecting a turnover? That's why the market tends to move to size. It tends to move to the bigger offers or bigger bids, because those are actually the participants that are looking to get out. That's the smart money in general, if it sticks around and if it's not spoofing. There's a lot of gaming. But look at these yellow streaks going up. Yellow, 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 yellow. And it continues on and on and on all day as the market rallies. So here's where the market's expected to start turning over. Now you get the big bids down here, right? 800 lots, 900 lots. You get these big bids. And then the market will move into those bids. Just moves towards them. And the reason there are bids there is because people are working orders to get out. So it's almost 8:20. I'll move past this, but it's really interesting to see as we push up, we see these offers liquidating positions. Okay, it doesn't look like it's done to me. Doesn't look like it's done doing what it's going to do. But as far as I'm concerned, it is extended at this point. And so I'm looking for today, based on what we see in the overnight. So that was yesterday. Let's look at the overnight. The overnight had pretty good volume, right? The overnight had 231,000 contracts traded. It tested higher, double distribution profile. Double distribution profile, the point of control is on the upper end of the range. It's higher than yesterday's high. Yesterday's high is 36.50. The point of control overnight is 39.50. We've got twice the amount of normal activity. And then we dropped right after the zoo survey number came in. We dropped pretty hard. We pushed up, we dropped pretty hard. Europe stayed strong, and we fell back into the range. Now we have a fair amount of temporary resistance, overnight-based resistance, which was low volume, all the way up to this low volume node at 38.50. 38.50. So that's the area I'm watching today. Today I'm expecting the market, given that there aren't any crazy numbers coming out or anything. We have a pretty good range overnight. 14 points is pretty decent range for the overnight session. The expectation this morning is for the market to seek balance at the beginning of the session. We're very likely to push through the all-time high again and push that up. But overall, I'm not expecting another trend day. The news is behind us. We're back to business as usual. We're back to looking at earnings and growth in the underlying sectors. And so we are likely to see a market that drifts up and then consolidates in between these high volume nodes today. So I'm looking for a push through all-time highs at some point. I don't have a probability on this, but there's very likely an equal chance that it'll drop down before it pushes up versus pushes up before it drops down. So 1 and 2 could play in either case. But today, I'm not looking for a trend. I'm not looking for a trend day. We have an elongated profile. We don't have a buildup of energy. And the market overnight showed that it's got a double distribution exploration, higher and lower. So we're likely to continue to explore the middle of this and play through the overnight session range. So that's the first scenario. The second scenario is we get responsive early, which is what we've been doing. Impulse up, consolidate, push through, and then come back down into yesterday's close after pushing new all-time highs. Does this make sense? The goal, the reason this was lengthy is I wanted you to see what are the many factors that I'm looking at, including how the weekly profile is extended. The trend up is not done, hasn't been done for a couple of years. The sellers coming in throughout the day yesterday and actually trading out. They're actually trading out on the sell side. We have collisions on the sell side despite the market moving up. And then you have more and more sellers stepping in as it started to top out in the afternoon. The overnight session tested higher, tested lower, put in a double distribution, double the volume. So we have a fairly active overnight session, and we're holding steady here at yesterday's close. So what this is saying is, despite whatever news came out, there was an earthquake, a really big earthquake that hit Alaska, just off the coast of Alaska today, that caused tsunami warnings around the Pacific and things like that. Even though that's priced in, the market's holding stable right in yesterday's close. So what that's saying is it's likely to continue to balance out through today's session. Okay, that's a long one. Sorry. Good luck. I'll catch you tomorrow. Take care.